Another episode from the channel. 2 weeks in a row, if you're keeping score at home. Today, as the thumbnail suggests, Tiff made his way back into the thumbnail. We've got a big rate announcement happening next week. Will this rate announcement have any effect on housing affordability, on home prices in the Greater Toronto Area? Stick with me in this video to find out, as well as to see an early look at how home prices fared right across the GTA, and that is even including you, Halton region. Hey everybody, and welcome back to the channel. It's me, Rob Marsiglio, sales representative with Keller Williams Referred Urban. I'm out here in Durham region, serving the great people of this area. I love to do it. I also love to bring you as close to as possible weekly content on this channel, keeping you up to date on all things GTA real estate. As I've already alluded to, today we are going to talk a little bit about the big rate announcement happening next week, as well as this big GDP print that we had today. Then we'll get into the stats, just some median sale prices. So let's start right off the hop with what is going to happen on June 7th. Spoiler alert, I really have no idea what is going to happen June 7th, but this is what happened today as I'm recording this. It's May 31st. A GDP print came out. Annualized rate of growth was 3.1% for the first quarter of 2023, and that's higher than what the StatsCan was expecting, 2.5% growth, which increases the speculation that the Bank of Canada will hike its overnight rate. Now, you're not here to listen to my projections on what is going to happen with the economy, so let's see what some smarter people, some economists think about this announcement and what that means for Tiff Macklem on June 7th. Let's start with Nathan Jansen, Assistant Chief Economist at RBC Economics. He thinks that there's some indicators that could convince Tiff to hold a rate hike until July. It's just saying that we're in the early signs that cracks are forming in the economic backdrop. Job vacancies are declining, consumer delinquency rates are edging higher, and households are saving less. There are also headwinds from higher interest rates that will continue to build. But the economy's resilience will put pressure on the bank to raise interest rates further. Governing Council will actively discuss a hike next week, but we think they'll wait until July to see if more evidence accumulates in favor of a rate increase. Now, prior to StatCan releasing this data, Benjamin Reitzes from BMO Capital Markets said the bank's decision could hinge on the GDP report, but he suggests that there's not sufficiently compelling evidence for further rate hikes at this time. He said one key is that the May employment data is not going to be out until after June 7th, and employment is a big factor that this rate hike will depend on. So he's thinking it's more than likely that we will see the interest rate increase at the July 12th announcement. And then on the other side, we have Jean-Francois Perrault, Senior Vice President and Chief Economist at Scotiabank, and they're calling for a rate increase. Even before the GDP numbers came out, arguing that they no longer have the luxury of taking a wait-and-see approach to inflation. So if you are keeping score at home, that is 2 votes to pause in June, 1 vote to hike. We'll see what happens. Again, not an economist on this side, but I have one cool resource that I want to share with you that you can check in with. It's being brought to my attention on Twitter by the awesome people at Twitter. And it just kind of gives us an indication as to what the markets are thinking is going to happen. And it's this table from the Montreal Stock Exchange. I put the source in the bottom corner here. Just gives us an idea of where they think the Canadian benchmark rate is going to move and by when. So right now they're kind of pricing in that 68% chance that the rate will be increased by September 2023. We can see that June is down at 26%. This chart, to be honest, kind of bounces up and down like a yo-yo. Anytime a report comes out, I feel like sentiment changes in the markets, and these are always changing, but just something for you to keep an eye on if you are trying to prognosticate for whatever reason what is going to be happening with interest rates. Now, will this rate hike affect home prices? And the short answer is yes, it will, but maybe not in the way you think. So another rate hike won't affect somebody's ability to qualify for a mortgage, a first-time home buyer, let's say, and that's because they are qualifying at fixed rates right now, because fixed rates are lower than variable rates, and it is the variable rate mortgage that is tied to the Bank of Canada overnight rate. Let me show you what I mean. This is an example with TD, their 5-year fixed versus their variable rate, and you can see the variable rate has been higher since the end of 2022. People haven't been qualifying on a variable rate product for some time now. So we're not seeing rate hikes affect affordability like we were seeing in early 2022 all the way up until now. It's really the fixed rate product that is kind of driving the affordability factor. That's what people are qualifying on right now. That being said, an increase in the overnight rate will draw somebody's amortization out. If you currently own a home and you're on a variable rate, whether that's adjustable in terms of your payments are actually changing, or if it's a fixed variable rate where your payments aren't changing, but like I said, your amortization is being drawn out, it could be putting some stress on homeowners if that comes to a head, if kind of policies are not being introduced to really kick this affordability can down the road and is allowing people to stay in their homes when they can't truly afford their payments. That's when you'll see probably some pain. That's where the price reductions will come in down the road. Again, this is all just my opinion. Bottom line, this rate hike or rate decision will have an effect on affordability, even if it's just some boosted buyer sentiment for a little bit of time. Say there is a pause, maybe prices tick up a little bit more. If there is a rate hike, though, maybe buyer sentiment will be hit and prices will kind of fall off a little quicker than we're seeing into the summer months. Speaking of prices, I want to wrap this video up with a little talk about the median home price. We are kind of at the end of May right now, beginning of June, depending on when you're watching this. So these numbers will start rolling out. I wanted to kind of give you a heads up as to what is going on. I've shown this chart in previous videos, just kind of projecting where the median price point for freehold properties will be across the GTA come May. And as you can see, we were kind of on pace to break through year over year. So what I've done is I've broken it down by market and Halton region. I've got you covered. This week, I've got Halton region freehold stats to wrap the whole video up. First off, Toronto. You can see that we are up month over month. We are going to be up year over year for a freehold property in Toronto as per Timecodes Matrix. We will be down quite significantly from the peak still. Durham region, prices are continuing to accelerate month over month. This is one of the bigger month over month jumps in freehold median sale price that we saw right across the GTA, up about $40,000 month over month, up $30,000 year over year. But again, it's still 20% off of the peak that we saw back in February of 2022. Now, York region has been the best performer year over year. Best is probably a bad word. It's had the biggest jump year over year in freehold prices. I think you can see that it has a lot to do with the big drop off that we saw between April and May in median sale price last year, but it's up about 6.7% year over year, up slightly from April of 2023, but just like as the trend across the board, still down significantly from peak pricing that we saw last February. On to Peel region now. Again, up month over month, up year over year, not by quite as much, and down pretty significantly from the peak in 2022. And this is the moment I think a lot of people have been waiting for. I'm probably building this up a little more than I should be, but I tend to neglect Halton region because I don't do much business out there, but I've gotten some feedback that people want to see some Halton region numbers. So here it is, freehold residential resale properties in Halton region. This is the median sale price as per Timecodes Matrix. Halton, the only of the kind of freehold markets that I cover that is actually still down year over year. I know that Halton has a lot of agents who post stats on ITSO. It's another board. It's not TREB. It's maybe the data set is a little bit incomplete here, but just from what I'm seeing on the Toronto Regional Real Estate Board, we are down year over year in Halton region, still up slightly month over month, and broken record Rob over here, down big time from the peak of February 2022. Now, before you yell at me and tell me I forgot all about the condo market, I did not this week. I'm just trying to cross-pollinate some of these platforms here. So hop on over to my Twitter page. Give me a follow over there where I do post a lot of these charts. I've got this big thread I put out, 10 posts today, and all the condo markets are also included in that thread. I hope the video has been useful. Again, congrats to us, everybody. We were back on a streak 2 weeks in a row of posting a video. Let's continue this next week. I hope you enjoy the rest of this week. And until we speak again, please stay safe and cheers. Hey there, I really appreciate you watching this video all the way to the end. If you enjoyed it, I've got another video for you right here on the screen. And, while you're here, maybe just click on my face, subscribe to. I don't want you to miss anything going forward.